Good evening, everyone. Myself, CA Poonam Pathak, committee member of Navi Mumbai branch, welcoming you all for the virtual CP meeting on global trends in internal audit, a look ahead, organized by Internal Audit Standard Board of ICI, hosted by Navi Mumbai branch of WIRC of ICI. Before moving ahead, let me acknowledge first presence of dignitaries on dais. CA Charanjot Singh Nanda ji, CA Abhishek ji, speakers today, CA Anil Agrawal ji, CA Bharat Garg ji. So we have with us Chairman of Navi Mumbai branch, CA Abhishek Saha ji. So working with you is an amazing experience as we are from the same branch, and sir is always a very dynamic and young leader of our branch, and he's putting so much efforts to make like our branch should do more and more activities. He has a 12-year post-qualification experience on various banking, taxation, and account finalization. With this brief introduction, I would like to invite our chairman, sir, for a keynote speech. Over to you, sir.
Thank you very much, Poonam, our managing committee member. So, respected dignitaries on the screen and off the screen. First, I would say CS Nanda sir, Chairman of Internal Audit Control Board of ICI, Vice Chairman sir, Gyanchand Mishra ji. Today's eminent speakers, Anil Agrawal sir, Naresh Pinge sir, Bharat Garg sir, and entire Internal Audit Standard Board of ICI. So first, sir, on behalf of Navi Mumbai branch, we are very thankful to you for giving this opportunity to host this program at Navi Mumbai branch. Sir, Navi Mumbai branch has a theme beyond the horizon this year. So this year we want to add something new to the profession and to the youngster also. As our managing committee average age is around 30 to 34 years, so we want to add something new, like automation, digital transformation. So today's webinar, as Poonam mentioned about internal audit, go ahead, so futuristic of internal audit. So I want to add on that. So digital transformation is the must necessary in internal audit, although it's started. As you see that robotic reconciliation, automation process, static analyst, which will help not only to the auditor as well as the management. As earlier, our standard practices was we will take sample around out of 100 we take 20, but from this digital transformations we are able to do 100% checking analysis at any kind of data level, which would definitely help. Also apart from these cyber securities, so internal audit somehow will move towards the cyber securities. That is the key area, you can say, the future of digital, as everything is automated now. If we are purchasing anything from anywhere in India, so internal audit will definitely come into this cyber security role. Also management and board definitely will look about the cyber security. Privacy compliance will be the key focus for internal audit. Apart from that, internal audit will uh, play a key role in business transformations. Also integrated risk management, which is the basic key thing of internal audit, will remain the key infinity. And internal audit will leverage the data analyst to manage the vast availability of data. That is also means somehow it's related to the data transformation and robotic reconciliation. So I can say the bright future of internal audit. And once again, I thanks to entire internal auditing standard board for giving this opportunity to Navi Mumbai branch to host this program. Thank you. Over to you, Poonam.
Thank you so much, chairman, sir. We have with us Charanjot Singh Nanda ji. He is Chairman of Internal Audit Standard Board of ICI. Sir, words are like not enough to praise the contribution you have made for the profession. It's my fortune to introduce a brilliant person like you. So, आपके बारे में कुछ कहना हो जाता है जैसे सूरज को दिया दिखाने के बराबर ही है. Still, as a formality, I have to read this profile, but all are very well know you and very well know the contribution you have made for our profession. So, sir is chairman of Internal Audit Standards Board. Sir is Central Council member, 25th Council of ICI. Presently, he is chairman of Internal Audit Standard Board, Digital Accounting and Assurance Board, and vice chairman of the Banking, Financial Services and Insurance Committee. He was the member of Quality Review Board set up by the Government of India. Sir also member the Central Council of ICI from 2004 to 2016. Sir was also the chairman of Committee of Internal Audit of the Institute of India and also the chairman of the committee members. He was the chairman of Women Empowerment Committee of the ICI. He was the vice chairman of Committee in Public Finance and Government Accounting. Sir was also the chairman of Professional Development Committee of ICI, chairman of Committee for Cooperatives and NPO sectors, was the vice chairman of Research Committee, was the chairman of Committee on Banking Insurance, was the chairman of Committee on Financial Markets. Sir has been the member of SEBI Advisory Committee on Mutual Fund, has represented ICI on SEBI Committee on Disclosures and Accounting Standards, was the convener of the expert group constituted by the Ministry of Corporate Affairs, Government of India on Investor Protection. He was also the member of the Southern Asia Federation of Accountants Committee on Professional Accountants in Business. He was also the chairman of the Continuing Professional Educational Committee, Public Relationships Committee, Committee on Internal Audit of ICI. Sir was the chairman of NIRC in 2002-2003. Sir, with this brief introduction, I would like to welcome you. Over to you, sir.
Thank you, Poonam ji. A very good evening, ladies and gentlemen. I have with me C. Abhishek Shah, the chairman Navi Mumbai branch. The revered speakers of the day, C. Anil Agarwal, C. Bharat Garg, C. Nagesh Pinge ji, Madam Poonam. We also have Arun Agarwal, Shivani Nigam, Surbhi Tyagi, Ayaz from the technical team, and Aarti Bansal and Arun Agarwal from the board. So, ladies and gentlemen, today we have a very exciting sequence of topics that needs to be discussed. I have one very concerned view that chartered accountants can only progress if they are always ready to hone their technical skills, because in the market, the expectations from chartered accountant is growing by leaps and bounds. And this profession, the internal audit profession, is a profession which is ever changing on a daily basis. So not taking much of your time, I'll come back to share my PPT on today's topic. Hold for a second, please. Poonam, is my PPT visible?
No, sir.
Not visible?
No, sir.
Now?
Not visible, sir.
Hold for a second. Hold for a second.
Yes, sir. Now
Is
it's
it visible?
yes, sir. Now it's visible.
Great, great, great. So, ladies and gentlemen, today's topic, you're aware the broader topic is virtual CPE meeting, global trends and internal audit. A look ahead. So today we'll cover three very important topics. The first is compliance and insurance sector. Yes, the first topic which will be taken by none another than C. Anil Agarwal is on how to comment, how to conduct the internal audit or how to look for compliance in insurance sector. The second topic by Mr. Bharat Garg is global trends and risk assessment, how you have to look at risk, identify risk and mitigate risk. And the third topic is internal audit from the lens of audit committee or board. You are all aware that internal audit essentially is a management function and you have to report either to the board or to the audit committee as the case may be. So now compliance and insurance sector. You are well aware that the insurance sector over the years have gone through various phases from being unregulated to completely regulated to now deregulated. Now, what does the deregulation of insurance industry in India mean? It has far-reaching consequences because it has changed the market size, structure, and operational practices to a great extent. And therefore, compliance becomes even more important. Bare act of laws and regulations and different cases and judgments by competent authority may also be considered so that we are able to effectively give our comments not only to our clients or stakeholders, but to the regulators and the government as well. With the introduction of mandatory quarterly internal audit for insurance by the Insurance Regulatory and Development Authority, the profession is empowered to contribute towards strengthening controls and also reducing risks under volatile market conditions. So in compliance, in a nutshell, puts the entire system into a benchmark where you are able to effectively look across the practices, best practices across all insurance companies in the country. Now, the second topic is global trends and risk assessment. You are aware that risk assessment is the overall process of risk analysis and risk evaluation. I remember a gentleman giving a call to me, he said, Mr. Nanda, I wish that I could do a business where there's no risk. I said, sir, in my opinion, there is no such business which does not have any risk. Because more the risk, more is the reward. More the risk, more is your thought process to earn value and worth of it. And more the risk, more is the opportunity. But for management, for the board, your risk appetite has to be defined. It is not the auditor who will define the risk appetite. So first thing is risk quantification. Yes, you have to identify the risk. And then you have to find the areas where you have to look at the risks. The second, when the risk has been identified, you have to assess the impact. Yes, you have to see while risk can be assessed on a qualitative basis, quantitative techniques makes the exercise more objective. You are able to understand what is the level of work which you have to put in and your impetus to create a risk-free environment. The third is assessing the likelihood. Express how much more likely one is to occur. How much risk can come to the doorsteps is very important, and some risks come from nowhere. How you have to mitigate that risk. Now, risk rating and categorization. When you finish the risk assessment exercise, for each of the risk in the risk database, or it can be there in the risk register, the next step of risk response is to need to analyze the result of the assessment. What assessment you have to make, you have to look at it and create a risk response assessment. And one of the main steps in this exercise, which runs along with all other steps, is the information and communication step. Risk rating is a very important aspect wherein you are able to determine and evaluate the risk which may entail the business or the business entity as the case may be. This also allows us to distill all the data collected so far. When I speak of data, the data is the gold and oil of today, because person who has data and who is able to effectively use that data for creating value and worth is the best business entity, the best board which is in sight. You have to categorize the results into a meaningful way and to apply some qualitative inputs so that you are able to derive a meaningful sanity check and use this check for determining whatever risks have been mitigated. Now, the last leg of today's session, it is internal audit from the lens of audit committee / board. So we need to understand what are our focuses. We have to focus on organization's deeper issues. Yes, sitting on the board, sitting on the audit committee, expect the auditor to bring out the deeper issues. You have to provide value in terms of strategic approach. We don't have to do any postmortem. Concurrently, we have all the data. And with technology, as the chairman was discussing, technology is something that can change our thought process. And therefore, you have to provide value in terms of strategic approach. Moving ahead, you have to look at comparative information and trending data of all contemporary benchmarking industries in the same business. You have to understand how much or how little information you have. The information which you have, how it is to be presented to board so that it is useful to the board or to the audit committee is very important. Focus on design rather than operational issues. Yes, you have to create a system wherein every question is answered on the same basis. Very, very important. And it is not to burden audit committee with deluge or information. You have to give only that information which is important rather than giving them loads of information. You also have to have a genuine and candid interaction with the board or the audit committee so that the auditor is able to effectively bring out the observations and issues which may have far-reaching implication on the company's financial well-being and operations. And last, very important, is to maintain independence of audit and focus on results, on a very result of the audit in a very candid fashion. Yes, independence has to be there, and what benefits we are able to pass on to the board is very important. The board ideas, thought processes, missions, visions have to percolate to all people concerned is the job of the internal audit. So, ladies and gentlemen, I'll not speak much because I have with me my first speaker, Shri Anil Agarwal, who would dwell on compliances in insurance sector. So, not taking much of your time, I gave back the dais to Madam Poonam Pathak for further proceeding. Poonamji, the dais is all yours.
Thank you so much, sir, for your enlightening speech. It's always great for us to hear from such an experienced person. And being a chartered accountant, we all knows cost of compliance is less than the non-compliance, and we all know how important it is to be a compliant business. So you can do a good business also. So sharing with us about knowledge on compliance in insurance sector, we have with us CA Anil Manik Lal Agrawal ji. Sir is chartered accountant with 20 years plus professional experience. The majority of his professional experience is in the area of insurance compliance and fraud control. He has worked in the compliance like Future General Insurance, India Life Insurance Company Limited, Aegon Life, ICICI Prudential Life Insurance, and Birla Sun Life Insurance. He was part of compliance function and fraud control department from the time these companies started their operation. He has a detailed and good understanding of IRDA regulations and compliance requirements. So with this brief introduction, I would like to welcome sir. Over to you, sir.
Hope my screen is visible.
Yes, sir, it's visible.
Hi, Mr. Singh. Hi, everyone. Thanks for the opportunity being imparted to me to make a presentation on insurance compliance. It's worthwhile being a chartered accountant, being on the legal side. But chartered accountants also do play a very pivotal role as far as insurance compliance is concerned. Insurance compliance, insurance industry as per se is a very highly regulated industry. I would say far more regulated than banks and other verticals of financial sectors. With this, I am making a small presentation on insurance compliance. Insurance sector per se on year-to-year basis is growing at the rate of 15 to 20%. Together with the banking service, the entire we contribute about 7% of the GDP. And insurance sector as such, if you see, there is a lot of investment that comes from insurance sector into the capital market. And the very basic thing is that in the insurance sector, the churning is not that high. So it brings stability to the entire financial domain, financial market. So like I've already said, so the purpose and the mission of IRDA is to protect the policyholders' interest, to regulate the industry, to ensure orderly growth of the insurance industry and the matters connected there. So taking that, I'm moving ahead as far as compliance mandates are concerned. The basic structure of IRDA, it's at the helm of the affairs of IRDA. The full form of IRDA is Insurance Regulatory Development Authority of India. This was constituted in 1999, and then the entire journey of strengthening of the IRDA started by the Ministry of the Finance, and today it is one of the very robust regulator in India. The structure of IRDA, it's like chairman, then there are full-time members and part-time members, ED executive directors, chief general manager, general managers. People below part-time members, EDs, GMs, CGMs, they are all employees of IRDA. And the chairman, whole-time directors, part-time directors, they are all appointed by the Ministry of Finance. The entire operations of the IRDA is governed by independently appointed board by the Ministry of Finance. And from there are even chairman of ICICI is also one of the board members of IRDA. Going ahead, the market players in IRDA is basically what is the gamut or the scope in which IRDA manages. There are IRDA basically, if you see, there are four types of insurance companies. One is life, general, standalone, health, and reinsurance. So total 67 players are being controlled by IRDA. On the life side, there are total 24, general 27, then standalone and health around 5, and reinsurance around 11. How is IRDA? The structure of the IRDA is there is an IRDA Act 99 which governs the functioning of IRDA. Then there is a basic Insurance Act which governs this. An act passed by the Parliament. So it was modified last in 2015. Then there is on the GI side, there is a Motor Vehicle Act even proposed by government, that is Ministry of Finance. And IRDA per se has notified about 200 notifications in the form of regulations, circulars, and all those things, wherein it governs the day-to-day working of these 67 insurance companies. Again, what IRDA does is they have a well-oiled business analysis portal wherein all these insurance companies have to pump in their statistics or information, and the data, the extracts from this IT portal is being used by IRDA to review and control and monitor the entire working. Again, being in insurance, the entire insurance business is on the basis of trust. IRDA even have an integrated grievance management system to manage customer complaints. And there is again a consumer education website that is being hosted by IRDA to enable the education process of insurance in the public at large. Now coming down to major regulations, I would just, before I say like how does the IRDA governs the regulations, I have just highlighted few very basic important regulations. Now starting with corporate governance, unlike RBI or SEBI or they have their own corporate governance regulations for banking, for mutual funds, and the same thing similar there is there for insurance industry per se also. What happens is these governs like how many mandatory committees we need to have, how many non-mandatory committees, then what are the expectations of the boards, then what are the like fit and proper criteria for selection of directors, then selection of MDs, then who are the KMPs, then KMPs means key management persons, their information. So these guidelines in total conducts or articulates the requirement of the board from the IRD perspective. These forms the backbone of any insurance company and ensures that the public money with which the insurance company is playing is in safe hands. Places of business regulation, obviously very regulated. In RBI, you will see there is a free hand given to the banks to open branches across the length and breadth of the country, but that is not the case with the insurance sector. For every branch, what we have to do is at the start of the year, we have to give a business plan, then there has to be board approval, then the communication has to happen. So there is a very detailed procedural requirement laid down by the authority, that is IRDA, for opening of a branch by any insurance company. Then post that, advertisements obviously forms perception about the company or the industry to the public at large. Authority is very much concerned that there should not be any mis-selling. Whatever information that have been given in the public domain is accurate, correct, and as per the products approved by the authority. Taking that into account, every advertisement, that is, there is a big process being laid out by the IRDA for release of the advertisement. You will not believe, I have got dedicated 2 people day in, day out just approving advertisements. And each and every advertisement that we release are to be filed with the authority, and authority itself reviews each and every advertisement. And in case they find issues, then insurance companies are taken to the task. And this is an authority is very seriously concerned the way the insurance company rolls out its advertisements. It's one of the very serious areas. That is the only reason why I'm connecting to the regulation piece, is to make you understand that how serious the regulations and how important the role the auditor would play when it is auditing an insurance company. Now, expense of management is basically there are norms which controls the expense by an insurance company, because companies are obviously dealing with public money. They should not go and overspend. So there is a proper tight line, proper norms, mandates, or greed is being stated that how much an insurance company can charge to the policyholders account and how much money they can charge to the shareholders account. So technically the ratio that's being stated is 1:5. That is a solvency ratio. And any company that falls, and the exemption given is for the first 5 years, then again, every year you have to go to the authority, explain, give a detailed insight why it is there. And that is how it is. So it's a very tightly controlled. Then again, for agents includes intermediaries, brokers, corporate agents, insurance marketing firm. There are proper norms being stated for their appointment training. Why these norms? So that there is a qualitative selling. Market conduct is a proper sale. The products that are being sold by to the customers should be as per their need. There should not be a mis-selling. So there is also regulations around that. Obviously, product filing guidelines. Again, each and every product that you find being sold by any insurance intermediary agent are being pre-approved by the authority, and it has to be as per the mandate, as per the structure approved by the authority. There are proper regulations around it. No one can bypass those regulations. So that gives the metaphors is that how regulated even the product guidelines are there for the company per se. Investments, very tightly regulated. Authority has specified the very tight norms as far as investments are concerned, where insurance company can invest, how it can invest. There is a capping around it. They have specified the scripts, like there has to be an investment committee. At the start of the year, the investment department has to present to the investment committee the invest where the investment would take place. Then once the total portfolio of the insurance company crosses 1,000 crore, then there is a requirement of continuous concurrent investment audit. Then again, at the gap of every 3 years, there is a requirement of technical audit. There is an IT audit of the investment system. So that is also very stringent norms around the investments. Coming down to outsourcing, even like RBI has got outsourcing norms. Similarly, insurance companies also have got outsourcing norms. Outsourcing means the activities which are core to the insurance company, which cannot be outsourced. Activities, the core can be outsourced, and activities which can be completely outsourced. The reason why there are outsourcing norms is to ensure that the vendors with which insurance companies are working, they come with a certain quality and standards. There are proper mitigation framework around the vendors, and whenever there is a dependency on a vendor, then they should be coming with a particular service level tax, so that there is no disruption as far as working of insurance companies are concerned. And rural and social sector, as you know, government is quite concerned about the penetration, about the social responsibilities, and that is also passed on the insurance companies. Every year, certain portion, number of policies and on the number of business, we have to sell policies in the rural areas. Those are very cheap policies. Means I would sorry to use the word cheap. There is a low price products which we have to sell to the people in the rural areas. And there are social sectors. Social sectors are as per the definition of all the I would say the employment categories has been defined. Like there are workers, then there are semi-skilled professions. We have to sell policies to those also. And the IID is quite strict about this mandate of meeting rural and social obligations. If company doesn't meet, then there are strict penalties around it, and insurance companies are being pulled up very strongly if we don't meet the rural social obligations. PPH regulation, policy holder protection regulations, is basically a rule book defined which an insurance company has to follow for meeting the service standards. Like they have suited the timelines within which the insurance company has to issue their policies, the process that the company has to establish for resolving customer complaints. Then for every activity, if you see, there is IRDA mandates that they have to have a board approved policy. Like intermediaries, I was talking, the entire policy process has to be board approved, and means it goes both ways. There is a principle based mandate and there is a rule based mandate, and every rule and principle has to be articulated in the form of a policy which needs to be approved by the board. And the board casts very humongous responsibility on the chief compliance officer of the company, which I am there, to ensure that these norms are being complied with. Why I'm saying all that? Because here, see, the thing is, a chief compliance officer may have a decent team, but for it to get into each and every activity is impossible. Here, a big role is played by the internal audit team to give that comfort or assurance to the management, to the chief compliance officer. That is the reason I have listed little bit important regulations in detail to just bring it to the table that how regulated the insurance industry is and how a pivotal and an important role the internal auditor plays in giving that necessary assurance to the board and the chief compliance officer. And obviously, AML, anti-money laundering, everywhere in the news, you would see that money laundering day in, day out, everyone is being, is being sent notice under money laundering norms. What AML covers is quite, everyone knows that there are proper KYC norms, then the source of funds, then how they churn the policy, even like a simple thing like I take a policy, I fill the policy within 15 days, either pay the money in cash and then take out a check. So like what IRDA has done, it's rolled out a red flag indicator list articulating very clearly the alerts that an insurance company has to manage and create and report to the FIU and in case they find something is not as per the law. ML in itself is a very big topic and I can discuss about it for an hour together. But here also, like one of the mandates by the regulator is the AML norms have to be regulated, have to be reviewed by the internal audit, either internal or external, every year, and the report has to be presented to the board. So, what are the compliances normally being checked or undertaken by a compliance function? What we do is whenever there are regulations that comes or announced by the authority, there is a clear analysis being done, the checklist is created, a dissemination is done, then there is a training that takes place. If there are gaps, those are being captured in the risk register. It's given to the audit committee, discussed with the audit committee. And if we find that we can't meet them, then those points are taken up with the authority. And then second, there is a compliance certification checklist process. Compliance certification checklist is more like a self-certification, wherein every department in the company has to validate and give a confirmation. Third is about training. Compliance involves a lot of training. It's a technical subject, lot of information that goes in. We have to be on our toes. We have to keep on reminding, reinforcing all the departments in the company that this is the mandates that you have to comply, that to ensure to training is a huge process that goes is one of the very dedicated activity that happens. In advertisement compliance, I've already told that each and every advertisement is approved by the compliance department before it is rolled out. And one more parallelly with internal audit department, what compliance does is it does a dipstick analysis wherein we do a compliance testing. It is on par with the way internal audit is done. Me and internal auditor, the chief internal auditor of the company, we both sit and at the start of the year we decide on the program and the areas we distribute. Which areas are to be done by the internal audit, which areas are to be done by the compliance. The areas which are highly regulated, highly governed, that is been taken up by the compliance and as a platform, and the entire program is presented to the internal audit committee. And as per the agreed program, we do the compliance testing, more of a deep stick analysis, and the report is presented to the management. So these are some activities which compliance does, and that is from my side. And I know its compliance is a very deep stick, very detailed program, uh, but this area offers a very big opportunity for budding chartered accountants, and it's a mix of legal, it's a mix of internal audit assurance, it's mix of your technicalities. Now even data privacy norms coming in a big way. Even there, the compliance department will play a very big and pivotal role. So that's from my side, guys. As far as my listing is concerned, so I'm stopping my presentations here. Poonam, over to you.
Thank you so much, sir. Sir, your speech is very informative and relevant. And I also believe it will be very helpful for the professionals working in insurance sectors. It will really help them very much. Thank you for this extraordinary session, sir. So moving ahead for our second session on topic global trends and risk assessment. As rightly said by our chairman, sir, CA Charanjot Singh Nanda, sir, more risk, more gain. And also there are lot of risk we can't avoid in business. So we need to decide our response for risk after the assessment, and which we are going to learn from our today's speaker, who is going to share his knowledge on this topic. We have with us CA Bharat Garg, sir. It's my privilege to introduce sir. Sir is a CA and CS with around 2 decades of experience in internal audit, process, reengineering, compliance reviews, investigations, operational risk management, and revenue assurance. Sir is also a certified internal auditor and currently pursuing CISA certification. Sir exposure spans across all the 3 sectors, consulting, private and public, and he has worked in reputed organizations like Deloitte, PwC, Vodafone, RBS, etc. Bharat sir is currently working as Head of Audit, Fidelity International India. He is also associated with Institute of Internal Auditors, Delhi chapter and IIA, India's Vice President and Board Member respectively. As Chairman of Publication Committee of IIA India, Bharat sir also publishes a monthly digital magazine, Internal Auditors Today. So with this brief introduction, sir, I welcome you for the session. Over to you, sir. Sir, you are on mute.
Am I audible now?
Yes, sir, you are audible.
Okay. Good evening, everyone. Thanks, Poonamji, for the introduction. I hope everyone is keeping safe and healthy. And I'm also thankful to Navi Mumbai branch President Abhishek ji, the organizing committee, Arun ji, Aarti ji, and Internal Audit Standard Board. And last but not the least, our beloved Charanjot Singh Nanda ji for giving me this excellent opportunity. My today's topic is global trends and risk assessment. Let me bring up my presentation. Poonam, it's visible?
Yes, sir,
Okay.
it's visible.
Okay. So, our topic is global trends and risk assessment. So I'll be covering into 3 broad aspects. So one, a little bit about the background. Then we'll be talking about the new emerging technologies and the associated risk. And finally, we'll talk about risk assessment. In fact, I'll spend less time on theory in respect of risk assessment, and I would like to share some examples from my organization. I hope you'll find those useful. Okay. So who are we, and what do we do? We all are internal auditors, and our role is to provide reasonable assurance over the control environment of the organization, to provide support, to provide value, and to provide insights to the management. So it's very imperative to understand as to how business has evolved over all these years and how the risk landscape have changed. So if you notice these various stages of industrial revolutions, it started with the first revolution, which started in sometime in 18th century. And therein the focus was on steam power to mechanical production. Over a period of time in the 19th century, mid 19th century, we moved to the second revolution, wherein the electrical power was used to enhance the production, and we moved to the mass production side. The third industrial revolution, as we all know, it basically automated the production assembly lines through use of electronics and computers. And now all of us, we are in the middle of fourth revolution. There are multiple new technologies which are coming together. They are all merging, they are all fusing together and basically changing the entire landscape. So this particular revolution, the pace at which it changes, it's phenomenal. It's changing each and every aspect of our life. And all of these technologies, they are basically blurring the lines between our physical life, digital life, and also our biological spheres as well. One another thing which I would like to highlight is, as you'll notice that the first two revolutions, it lasted for more than 100 years. The third one, half of it. But the fourth revolution, it's changing very fast. The speed is phenomenal. In fact, I would say that, all the organizations, they would be monitoring change as a risk. But these days, the bigger risk is not change, but the bigger risk is pace of change. And in line with the business evolution, the internal audit has also evolved a lot. Internal audit has shifted gears, and internal audit has been moving in tandem with the business environment to make sure that business needs are being adhered to. So as you'll notice in the presentation, in the initial stages, internal audit was more focused on the finance controls. It was reporting into the CFO, and it was only focusing on the financial aspects. However, over a period of time, as you can notice, our remit has extended across the organization. Our reporting has also been strengthened. Rather than reporting to the CFO only, now in most of the organizations, there is direct access of CAE to the audit committee chair and of course to CEO for various administration purposes. In addition, in respect of the objective also, that has also changed. Rather than providing a reasonable assurance over the risk and the control environment, over a period of time, the internal audit has moved ahead, and now we are also providing value-added services. In my organization, if I take an example, we have followed a right first time approach. So if there is any key project which is impacting any business unit, be it HR, technology, or anything, internal audit would always be there to provide oversight, to provide support, and to challenge if there are any embedded risks. There is no point in doing a post-mortem exercise. So we think it makes sense if, a big ticket projects or big ticket, changes, they are being done along with the internal audit. And of course, there may be, some independence issues, but those are duly mitigated. We maintain appropriate segregation in terms of as to, who is sitting on the project steer course and who is actually doing the audit in case we have to do at a later stage of time. In addition, in terms of focus and coverage, again, the focus was more historical in nature, but now organization, the board, the senior management, they expect a lot more from the internal auditors. They expect internal audit to provide insights. They expect internal audits to add more value to the business. They want a forward-looking internal audit rather than doing a post-mortem exercise. In terms of coverage, previously we were focusing more onto the basic controls, financial controls, but now it's across all spheres of the controls, be it operational controls, be it financial controls, be it credit related, technology, strategic. So everything is come under remit of internal audit. And as outcome based also, so previously it was more about, detecting mistakes, errors, policy non-compliances, or non-compliances to rules and regulations. But currently the focus is more on improving the business units, identifying inefficiencies, The report previously it was going to senior management, but again internal audit has evolved, and now the reports are directly going to the audit committee, to the management. We have direct access to the audit committee chair, so the independence has been strengthened a lot. Standards, as we have seen, so even there were no standards in past few decades, but over a period of time, Institute of Chartered Accountants has come up with a lot of internal audit standards, and largely the entire internal audit life cycle is covered with those standards, and all of us, we are expected to adhere to those standards. In terms of resourcing, this is very interesting. So in terms of resourcing, previously it was supposed that most of the internal auditors would be from the finance background, because the focus was more on the financial controls. However, over a period of time, since the business environment has become very complex, it may not make sense if the internal audit function comprises only of financial auditors. So they need to be a mix of people with variety of skills to complement each other. In my organization, in our team, we have a very diverse mix. So we have people who are chartered accountants, we have people who are MBAs, we have people who are experts or who have been drawn from the operation side. There are people who are engineers who work on various technology related risks, and we have data scientists as well to help us on various engagement analytics and thematic analytics. In fact, in addition, and even as I mentioned, that the business environment is very complex. So what we also do is at times that we also invite guest auditors in case it's a very complex process or something which is quite new and which requires some niche skills, or we also go in for co-sourcing models. Things like, I would say, network security, or things like model risk and quant analysis, those kind of stuff. The planning, again, it has moved a lot. Previously, it used to be annual plan, but now the annual audit plans, that's a passe. The organizations has moved to risk-based rolling plan. In our organization itself, we have moved to 6+6. So previously, it used to be an annual audit plan, but of course, we used to evaluate it every 6 months. But now it's more carved in stone. So it needs to be updated every 6 months in line with the changing business dynamics. And of course, previously, the internal audit was not serving various management requests, but these days managements come quite often to internal audit and requesting support for various advisory support, various project related support, or needing help in certain evaluation, or needing help in various business decisions. In fact, we in our organization, we take pride, whenever management requests us for any particular support. So that's a testament to the good work which probably the team is doing. Okay. Moving to the next. So herein I have listed few technologies which are emerging these days, which we get to hear quite frequently. They are not in any particular order, but something which are more mainstream. So first one is like cloud computing, and a classic example from our day-to-day lives is Google Drive, which probably all of us uses for storing our data, our pictures, our emails, and all of that. And of course, within the organizations, we have seen multiple use cases. In fact, many organizations, they have vision to move 100% to the cloud computing for all their software related applications, be it software as a service, be it for platform, be it infrastructure related examples. Like we have Microsoft Azure, we have Amazon Web Services, software as a service, various financial ERM softwares. Then we also have Oracle and SAP, which are more cloud-based softwares rather than on-prem solutions. Then the next is big data analytics. In 2011, the Harvard Business Review mentioned data science as the sexiest job of 21st century. And that was not an overstatement. In fact, we have been seeing it, the power of data analytics across all industries. And within my organization, if I give you an example, so we serve millions of retail clients who have invested in our funds and various other asset management related products. And we evaluated multiple parameters, more than 50 odd different parameters for each individual retail customer. in terms of their age, in terms of their sex, in terms of their investment patterns, market patterns, all of it, to analyze as to, what is the probability of a customer leaving my system, or going out of my system in case market crashes by 5%, market crashes by 10%, or in case they reach a particular age group, say 55 or 60. And of course, we can make some good use of it in terms of uh, analyzing and I would say improvising our retention strategies. So too many examples with respect to this. And of course, various internal audit teams are using it for various fraud prevention measures as well. Robotic process automation. So in terms of robotic process automation, again, I would say like the banking and financial services industry, that's one of the early adopters of all of these technologies. We adopted RPA. We started experimenting with RPA 8-9 years back when we, deployed our first RPA. And now there are hundreds of RPAs which are working in our organization for doing a lot of admin and mundane tasks. They have relieved a lot of bandwidth which can be used for various other purposes. Take an example, who submits a form, and then that form is sent to a back office center or an offshoring service center. Therein one person punches it into the system, another person reviews it, and finally the transaction is executed and in the mainstream system or client administration system. Now what we did is we coupled RPA along with optical character recognition, and the entire digitization of that form is done via OCR. So basically the need for first person to actually punch the data into the system, that was eliminated. Thereafter, there would be a second person who would only evaluate and see if OCR has captured it correctly or not. And in case, assuming there are 20 data points and OCR has captured 18 of them rightly, so that person will change only the remaining 2 of them. And then, of course, there will be a third reviewer, but third reviewer will not focus on 18. The third reviewer will focus only on those 2. And over a period of time, we have reduced, that those 2 instances also through use of ML and other aspects. So another good example of robotic process automation which we have seen is from the asset management, again from the asset management industry. So not long ago, the asset management industry was it was a good industry. People were making good amounts of money, and it was pretty easy to charge 100 200 bips from any retail clients in India for managing assets via funds. But over a period of time, you would have seen that many established AMCs, some of them listed AMCs, HDFC, ICI, Nippon, they are facing a lot of challenge from various new age companies. They are called robo advisors. So it may be Jiroda, it may be Upstock, it may be Grow. So they are leveraging the technology, and they are happy, to manage your money. They are happy to manage your assets at a much lower fee, and in fact, in certain instances, pretty free. And how they are able to do it? Through the power of robotic process automation, through the power of artificial intelligence, machine learning, and fusion of multiple technologies. In fact, you will wonder that these days, a significant percentage of the trading is being done by the bots in the market. And these bots, they continuously evolve over a period of time. They come up, they conceptualize new trading strategies, they evaluate the results, they immediately, almost on an instant and real-time basis, they are able, to do a backward analysis and can fine-tune their strategies. Next, blockchain. So a classic example is crypto, Bitcoin, various other cryptocurrencies. As of now, there would be more than 2,500 cryptocurrencies and counting. Every week or so, we keep on seeing certain other cryptocurrencies coming up and making a lot of noise. Of course, the financial services regulators are not so happy. There are various concerns with respect to anti-money laundering, sanctions, various other related transaction monitoring issues. However, I'm sure over a period of time, the ecosystem will evolve, and this will be mainstream. And in fact, even apart from the usage in the crypto, the blockchain has found a lot of other use cases, more particularly, say, for example, in credit finance in the banks. Okay. I spoke a bit about artificial intelligence and machine learning. Quite often, these two terms are used quite interchangeably, but artificial intelligence is more an intelligent machine with human thinking, wherein machine learning is a sort of continuous improvement, wherein the system or the application continuously evolves over a period of time on the back of the data analysis. And some good examples is, when we would have seen in various apps or into the bank, say for example in Zomato, if your order is get delayed, so rather than a human agent, you get to talk to a chatbot. And over a period of time, depending on the kind of queries which are coming, depending on the data which is being generated, these chatbots get smarter and smarter, and they are able to also have a next best conversation. Not in case of Zomato, but say for example in case of banks or in case of other industries, whereby those can be used for upselling, cross-selling, those kind of stuff. Internet of Things. Again, it was supposed to be mainstream. A lot is being said about it. Basically, where various other physical objects that we see around us in our home, in our office, they will get smart. They will have electronic sensors attached to it. Some of them we see quite often our smartphones, smart bulbs, smart cameras, smart TVs, smart cars, all of it. Smart metering, one very good example in the energy sector or basically in the distribution sector. In case of vehicles, there are many developed countries which have moved to black box insurance. So basically, your car will have a sensor, and as in current scenario wherein you pay a fixed insurance amount for your vehicle depending on its age or depending on the vehicle type, over a period of time there may be differential insurance pricing. So it may depend upon your behavior, how much you drive, how safe you drive, because there is a sensor attached to your vehicle. And then various other things which may be used in production, assembly line, manufacturing for various purposes. Drones, robotics, 3D printing, AR, VR being used in games. It's being used in the hospitality industry. And with all these new technologies emerging, the risk profile also changes. So herein, I've listed some of the emerging risks. So the last one, we have also spoken about digitization, tech disruptions, how different businesses, they are being disrupted via new technologies coming up. In addition, some other risk, changing regulatory landscape. Now, statutory and regulatory obligations. In fact, previous speaker Anilji also spoke a lot about the regulatory obligations in the insurance sector. So it's not a new risk, but what makes it unique these days is that not even a single industry, is escaped from various regulatory or statutory requirements, and more importantly, every industry is inundated with a lot of new regulatory environments. So the regulatory scrutiny across all industries is getting more stringent. Second one is cyber security and data privacy. So, and unfortunately, due to COVID-19 related disruptions, due to people working from home, people using their own devices, people relying on to, shared networks or your own personal networks, the threat, the vulnerabilities to an organization network has increased considerably. And it's very important considering the reputational loss, financial loss, that it needs to be monitored adequately. Very recently, we saw example of attack in the Spice Chat, the ransomware attack in the Spice Chat. It was all over the news. So all organizations need to secure their network, secure their business from cybersecurity related risk. And related one is data privacy. So there is more awareness with respect to data which is being provided to the organizations and how they use it, how they store it, how they process it. One very classic example is GDPR, how it has transformed how data is being managed within an organization. In fact, very soon, India may also have its own data privacy bill or act very soon. Next is business resilience. So the show should never stop, whatever may be the exigencies. The business continuity should be prevalent. Even and now it has multiple aspects. So as and when the debt, or in fact, I'll give you another example with respect to business resilience. In fact, I would say the risk has come down over a period of time. So there are three core pillars of business resilience. So loss of people, another is loss of your site, more particularly in case of service industry, and the third is loss of technology. Now people have been working from home for last 2 years, so loss of site is no longer an issue. So we have demonstrated that the work can be done out of home, work can be done out of anywhere. People may be sitting remotely, you need not come to office. So that risk to a large extent has been mitigated. The second one, with respect to loss of technology, again with organizations moving their software application and the entire technology landscape to cloud, this is becoming more less and less mitigated. So you may not be dependent upon your own organization servers and the DR networks, but since you are moving on to the cloud, which are bigger players, which have multiple layers of security, which have multiple layers of DR planning, so again to a large extent it's being mitigated. It's only loss of people when you have some big ticket items, when your businesses or processes are concentrated in a particular city, and those are prone to, say, floods, earthquakes, or even atomic attacks, those kind of stuff. People another emerging this risk because of COVID, and it has become lot mainstream. So there are multiple aspects to it in terms of talent acquisition. So there were many instances in the initial stages of COVID-19 that the impersonation risk was pretty high. And then, of course, organizations tweaked their hiring policies, hiring the controls around it when in person is being interviewed online. However, the risk doesn't stop over there at talent acquisition, but there have been multiple instances of people doing moonlighting, and it has become extremely difficult to manage a person's work while he or she is sitting and working remotely. In addition, recently, because of COVID, most of the organizations, they are digitizing their businesses, they are digitizing their processes. In fact, the entire business environment has leapfrogged multiple years because of COVID. So there is a huge shortage of tech staff, as we could see, from the mass resignation move which is going on. So people has become a mainstream risk these days. Next is environment, social governance, and pertain to sustainability, climate change. Again, it has become quite mainstream. A few years back, it was more of a discussion pointer, but these days, all the boards, the senior management, they are giving a strong thinking with respect to ESG related aspects while formulating their strategy, while formulating their operational measures. If I talk about from an investor standpoint or from an asset manager standpoint, everywhere you will see a host of ESG specific funds which are being launched. And in addition, most of the new money, most of the new assets, they are going into organizations, or they are going into businesses which are more ESG compliant or which score high on the ESG parameters. Next, we talk about third-party management and supply chain disruptions. I think this is quite self-explanatory, and we have seen many examples because of COVID, wherein there was a huge shortage of semiconductors. Of course, there are other reasons as well, and as recent as because of Ukraine, Russia, there is a huge shortage of edible oil and other edible items across the world. Culture. As the famous management guru Peter Drucker says, culture eats strategy at breakfast, and it holds good at all points in time. So an organization may have the best of the best team, best of the best leadership, best of the best operations, but unless and until the culture is managed, there is a innovative culture, there is a collaborative culture, it's very difficult to achieve the objectives. So internal audits organization need to be mindful of the risk emanating from a rotten culture. Digitization tech disruptions, we have spoken in the last slide, so I'll skip it. I'll move on to the next. Okay. So audit planning and risk assessment. I'll focus more on the risk assessment rather than the audit planning. And herein we are talking about the audit planning for a particular period rather than an individual planning for an individual audit engagement. So standard on internal audit 210, which talks about the periodic audit planning. So there are few things which needs to be considered. Of course, there may be lot many depending on the organization, but few basic ones. One is the knowledge of the business. So this goes without saying, an internal audit cannot function unless and until they understand the business, they understand the business model, their products and services, what are the threats to the business, what are the strengths of the business, what are the new disruptions, innovations happening in the competitive space. Say, for example, we hear a lot about electric vehicles these days. Now, if the electric vehicles become mainstream, and of course they will in next 5 years, 10 years, it will have a significant impact on the multiple auto ancillary industries. Think of companies which are making lubricants, because in EV vehicles, you will hardly require lubricants. Think of companies, which are making lead acid batteries. Probably they will go out of business unless until they adapt and move to lithium ion based batteries. So it's very important to understand as to what is the business doing and what are the challenges. Next is management stakeholder discussions. And herein, the function shouldn't restrict only to the senior management or to the board as to, what is their line of travel or what is their direction, what are they thinking, but internal audit function should go below, even at the floor level, to understand executive level, middle management, multiple discussions to understand as to what's happening on the ground. Sometimes because of the culture, because of various other roadblocks, the critical information which is imperative for decision making may not reach the top management. So it's important to get a feel as to how the business is being run at a ground level, and also to understand as to if there are any challenges, if there are any bottlenecks, if there are any issues which the management is facing. Are there any operational challenges which may not be visible sitting at 36,000 feet? Audit universe, I think that's quite self-explanatory. Risk assessment. So this is one of the most core component for an audit planning. All the internal audit functions, we all acknowledge that the resources in terms of financial budgets, in terms of our manpower, they are always scarce. And it's very important that we provide adequate coverage over the entire organization. So one has to do a risk-based auditing. And as in case of any other banking and financial services or any other or industry which adopts a 3 lines of defense model, so wherein the first line also performs a risk and control self-assessment. So herein I am talking about independent risk assessment which is being done by the internal audit. It shouldn't be confused with the one which is being done by the first line or by the business and overseen by the second line. That is more descriptive, and that covers all the inherent risk pertaining to a particular business unit, pertaining to a particular process, and all the controls to mitigate those risks. Herein, we are talking about a high-level risk assessment which is done by the internal audit, and for which the risk assessment done by first line or the business may be used as an input. Then technology deploy, and we'll talk a little bit more about it. Technology deployment. So it depends as to how mature a process is from technology standpoint, whether the applications, the landscape, it is on-prem, it is cloud-based, is it a third party, is it a legacy application, or are there multiple technologies which comes into play for interface, or is it a standalone application, how interfaced it is, what are the various incidents which are coming up. So those kind of stuff, it needs to be understood to provide score to a particular audit object. Resource availability, of course, it goes once you have done the risk assessment, it's helpful, to prioritize your resources. Regulatory statutory expectations we have understood, but one specific thing is there are many geographies wherein, say for example, Germany, I would call out. So Germany may say that you may adopt a risk-based auditing, but at the same time, you also need to provide coverage over the entire audit universe. So they strongly believe in cyclical audit rather than risk-based. So there are certain specific audit objects which you may need to audit on an annual basis, irrespective of the risk. Uh, for India as well. So if you compare the size of India units in the balance sheet of many big MNCs, it may be very small. So it may not appear high on the risk scale, but because of the Companies Act, there are some specific rules and responsibilities for the board to appoint internal auditors and to have internal audit which is commensurate with the size and scale of operations. So there may be a need to audit India operations as well. Approval and continuous monitoring, again, I'll skip. Okay. So before that, so this is a example from how we perform risk assessment in our organization. And before I talk about these parameters of risk assessment, I'll show you something else. Okay. This is just a snapshot and a very crude example, which I created specifically for this, but to a large extent, it mirrors what we do in our organization. So as you can see, this is a snapshot of audit universe and typical, and I have chosen certain audit objects, which may be industry agnostic. So every organization, every industry would have HR, they would have technology. Of course, the risk may differ. So how we do it is that, as I said, this is a snapshot of the audit universe, and we perform a risk assessment at a L3 level. So at the top level, we have HR, which is as a function. Underneath HR, there may be multiple functions. It may be payroll, very straightforward. Talent acquisition, again, quite straightforward. Talent development, training, learning opportunity, learning aspects, compensation and benefits. Similarly, technology, multiple on the security parameter, it may be network security, it may be threat intelligence, information security. Then at an L2 level, you may have application development, change management, those kind of stuff. And then at an L3 level, we have further bifurcated. Say, for example, I have taken this particular example. Under HR, level 2 payroll, further bifurcated into 3 broad categories. Of course, this will differ from organization to organization. So I have taken these 3 examples: North America, APAC, and Europe. Now, the assessment will be done at L3 level. The assessment will include multiple inherent risk factors, multiple controls, and then it will come up with a residual rating. Of course, we have done some modeling into it. I'll come to certain technologies which we are using in this space, but this is how we do. So every 6 months, we lift down various inherent factors, various control factors, and then we come up with a risk scoring for each of these L3 entity. And not only the scoring, but at the same time, we also update as to what are the various organization specific policies which are applicable to this particular audit object. Say, for example, payroll, information security would be applicable, data privacy will be applicable, business continuity will be applicable, supply chain disruption, vendor management would be applicable if your payroll is outsourced. Compliance with laws of the land would be applicable, because you need to comply with the local label laws in every geography. Then another aspect or data attribute which we capture is legal entity. So for North America, definitely the legal entity of USA, legal entity in Canada would be impacted. Of, say, if the payroll is being done out of, say, Philippines, then the Philippines legal entity would also get ticked off. Moving right, again, the country of operations. So One is the legal entity which may get impacted if case it's the originator, and the country in case say for example there is a legal entity which is incorporated in Luxembourg and it has got branches across multiple countries in Europe. Then where are the operations based if it has multiple branches across other countries? So all of that is captured. So for each audit object, so we understand applicable organization policies, applicable legal entities, countries where it's being worked out, and a host of inherent risk and control factors. These are some of the factors which we consider. It's a mix of both objective and subjective factors. We consider various statutory regulatory requirements. We consider risk assessment. I'll again reiterate that herein also risk assessment, herein also risk assessment. This is the risk assessment done by the first line, and this is the one which is being done by the internal audit. So the comprehensive risk assessment is an input for this. So if I know that a business has assessed that within technology, the threat intelligence is bit poor, or the residual risk for threat intelligence is bit high, then probably it may score high for my risk assessment. Management information. What are the key KPIs? What are the key information which the management is monitoring for a particular function? If there are any big ticket projects which are ongoing in a particular function, say for example, if the finance is moving from, just an example, moving from Oracle to SAP, it's a big ticket project. What implications it may have? What are the timelines? What whether the data, what changes may it bring onto the data quality? Those kind of stuff. Management stakeholders, we have spoken about. Tech incidents. There may be systems which may be quite mature. Typically, all third-party systems, the key ones, of course. And but if it is a new system, or if it is pertaining to a new product, or maybe it has not been configured appropriately and implemented appropriately, it may be quite flaky, linked to a large number of incidents, or the vendor support may be poor. The risk events which are being raised in that particular audit object, industry info. So that's quite basically high level market information. Risk governance forum packs. So internal audit functions, the chief audit executives, they sit on various steer codes, they sit on various risk management forums, various audit and risk committees of multiple legal entities. So they have access to various forums in the packs. External oversight from external service providers, any other open known issues, either emanating from the audit reports, or if they are emanating from the compliance monitoring or second line reviews, or something which has been done by the business itself. And once all of this is populated into this Excel sheet, we have come up with a model, simple model, basically, wherein we have given a weightage to each of these inherent risk factors and control factors, and we come up with a residual risk rating. And depending on the residual risk rating, say for example, information security, most of the time it will be super high. So then of course, it will be always be there onto my plan. And it's very important, to mitigate this in the overall scheme of ERM framework. At this stage, I would like to showcase a video. It's more related to risk management, but Poonam, let me know if it is audible.
Yes, sir. So it's not audible.
Not audible? Okay, one second. Oh, sorry, give me a minute. We tested it in the morning. Okay, let me try again. Sir, is it audible now?
To eliminate risk.
Yes, sir. Now it's audible.
Sir, we found a way to eliminate risk entirely from our projects.
Poonam, it's audible now?
Custom engineer.
Yes, sir. Now it's audible, but not properly.
Okay,
Can
okay.
you increase the volume?
Okay, no problem. Maybe, after this seminar, maybe I request you, to have a look at it. So you search for risk management with a crystal ball, as you can see in YouTube, and you will find it. It's a 2-minute video and it's pretty nice. Sorry about this. Okay. Yeah. So basically, we have given a risk score to each of these inherent risk factors and the control factors, and the weighted average is being calculated, and then we come up with a residual risk, and depending on the availability of our resources, depending on various other factors, we come up with an internal audit plan, and that's something which we can truly call a risk-based internal audit plan, and that is being refreshed on a periodic basis. In terms of certain technologies, as I spoke about, so within internal audit also, we have been using certain technologies. So I'll give you, I'll share few of them, which we are experimenting currently. So as you see over here, some of these, factors, they are objective in nature, and some of these are subjective in nature. Objective ones like risk events, objective ones like management and MIS, objective ones like attrition rate, open known issues from multiple sources, and technology incidents, those kind of stuff. So what we are doing is that we are basically preparing a model by the help of the technology teams, wherein all of these information is available in different systems, and we are implementing a data lake and a cutting edge Snowflake kind of tools, which basically fetches data from multiple systems across the organization. So this, our model will be fetching all of these objective data pointers from multiple sources, and those will have a common key whereby this will get mapped to individual audit objects, and it will keep on refreshing this data. Of course, there is some subjective data, there is some professional judgment and skepticism which has to be run, but it will solve a lot of problem because it will be real time rather than a periodic assessment. It will more become a dynamic risk assessment, because as of today, all of this information is to be analyzed by a internal auditor in person, and there may be consistency related issues. So we have made some progress, but I think it will take some more time about it. I would also like to share another example of usage of technology in our organization, in more particularly in internal audit. So as you know, our organization business is spread across multiple geographies and multiple countries. All the internal audit reports, they go through a formal review process as well, but still we perceived a risk of inconsistency. Sometimes the choice of words, the messaging in the executive summary may not be consistent for similar kind of issues or similar kind of risks which are being highlighted, and it may be because of cultural factors and all. So we built up a natural language processing based tool, sentiment analysis, wherein it evaluates the executive summary, and just a click of a button whereby we have enriched the dictionary with use of various words, commonly appearing words from the executive summary, words like strengthening, inadequate, risk, those kind of stuff, and it's huge. It has got around 450 different type of words, and we have given a score to each of those words, and it comes up with whether the executive summary of, say, North America for similar kind of audit issues is commensurate with the rating which is being given to the overall audit report. and it has been very successful over a period of time. We have been using it for last 2 years. We have been enriching it on a regular basis, and now we see that, the messaging getting very consistent. So those are some of the examples, or my experience, which I wanted to share with respect to today's topic. If there are any questions, we may take up now, or maybe towards the end of the seminar. That's it from me. Thank you, Poonam. Over to you.
Thank you so much, sir, for such a wonderful presentation and session. And your presentation is also self-explanatory and colorful.
Thank you.
And sir, as rightly said by you, earlier businesses looking for audit, internal auditor who is doing audit for the past events, but now they want someone who is looking forward, not only doing postmortem of the events which has already happened. They are expecting more from the internal auditor. Also, you have shared with us about the new upcoming technologies, and for understanding the risk, first we need to understand the business, what the businesses are doing, and then we can assess the risk they might happen for the businesses. So thank you so much, sir, for such a good session. It is very much value added for us. And moving towards our third session and the last session of today's topic of the session is internal audit from the lenses of audit committee. Audit committee need to see that the internal auditors have appropriate independence and also have proper support from the senior management. To share more about this topic, we have with us the eminent speaker, C. Nagesh D. Pinge. It's my privilege and fortune to introduce such an eminent speaker who has so much knowledge and experience of around 39 years. So we have with us C. Nagesh D. Pinge. Sir is an expert in ethics, corporate governance, risk management, and internal audit. He is chartered accountant and law graduate from India. He has also completed executive education program from the Stephen Ambrose School of Business of the University, USA. In a career spanning 39 years, Sir has worked with many organizations of repute. He retired from Tata Motors in November 2016 as Chief Internal Audit, Risk Management and Ethics. Prior to that, he was Chief Internal Audit of Reliance Retail Limited and JSW Steel Limited. Sir has also worked for ICICI Bank and its group companies in risk management, regulatory compliance and internal audit. He is an independent director in many companies. At the professional side, Sir is past president of Institute of Internal Auditors India. He is recipient of ACIIA award given by the Asian Confederation of Institute of Internal Audit for outstanding contribution in internal audit for the year 2017. He is also a recipient of ICI award given by the Institute of Chartered Accountants of India for the year 2014. Regular faculty at master class for directors being conducted by the Institute of Directors in India. Sir has authored a technical guidance note on risk-based audit for banks being published by the Institute of Chartered Accountants of India, co-opted member of Internal Audit Standard Board of ICI for the year 2022-23. Sir is a regular guest speaker on many conferences on internal audit and risk management in India and overseas. His presentations are very informative and he shares his rich experience and the global perspective. With this wonderful introduction, I would like to welcome you, sir.
Thank you, Poonam. Thanks a lot for introducing me so nicely. And thanks to the Institute of Chartered Accountant and your chapter for inviting me over here. For the next 35 to 40 minutes, I will talk about my own experience. And just to tell you in short, till 2016, I was the chief internal auditor on the other side. Since 1998, I have been the chief internal auditor at 4 organizations, basically, till 2016. And they were, organizations of repute. I was the chief internal auditor for ICICI Bank. After that, I was chief internal auditor for Reliance Retail. I was chief internal auditor after that with JSW Group. And then I had a very long innings with Tata Motors and I retired from there. And I think in fact, you had 2 sessions, one from Anil Agarwal, who's from Magma Insurance, and last was Bharat Garg, who talked about his own experience in Fidelity. And they are all there for the question and answers. I must say that I have left internal audit as a practitioner in 2016. After that, I have never got involved in internal auditor as an auditor. But certainly, I have switched my table from there to as a chair of audit committee on many companies on that account. And I think in that context, I will share with you what are things that are happening internationally, what are the things that are happening in India, and what exactly has happened to me, so that it will put you in the perspective and what are the expectations on that account. So from that perspective, I must say that when it comes to the international practices of internal auditing, and in India, if you are asking me, there used to be a huge gap earlier, but now I must confess that India has caught up with most of the other countries in terms of the corporate governance, in terms of the audit committee related part, and we are as good or in fact better than the rest of the country, rest of the other countries in the planet. And if you are asking me today, with the right kind of skill sets that you develop in the organization, you can really do wonderful job. But I will also tell you some of the things which are very critical from your perspective, and this is more relevant to the people who are in internal audit in corporate world, and that will be far more relevant to them, because whatever I'm talking not as a practitioner internal auditor, but as an internal auditor who is embedded into the corporate kind of team on that account. And I must say that first thing first, internal auditor is nothing but a commodity. So if you are asking me what is the difference between a chief internal auditor at ICICI Bank, at Tata Motors, at Reliance Retail and JSW, they are 3 different kind of industries that I have worked on. First was banking, which was highly regulated. Second was Reliance Retail, which was a retail. Retail is like we always say, retail of detail. You have to get into everything in detail kind of thing. You have so many shops across India. Lot of things can happen across at the simultaneous kind of thing. So you have to look at it from that perspective. Third one is, of course, the 2 manufacturing companies. I was involved in that particular thing, more or less on the same kind of things on that account. But I must say, internal audit has remained the same. What has changed at the backdrop is the business knowledge that one person needs to catch up with. So I think in that account, I must say, role change for an internal auditor is always possible. And that is where internationally also you will see a lot of movements happening. Somebody from IT industry moving to manufacturing to service industry. This is quite known. What is relevant is internal audit, how he manages as an internal auditor becomes a very important point. And as I told you, internal audit consists of 2 elements which are critical to the success of an internal audit. One is the business knowledge. Second is the internal audit practices that one needs to use. And the third one, which is far more important, is how you manage people. People means your bosses, your peer, your fellow management guys, then how are you managing your team? So it is a composite kind of thing that you have to look at it to be successful, to be not only as a chief internal auditor, but also as an internal auditor in that context. And today, having heard 2 technical sessions, one on insurance and one on what Bharat has talked about on Fidelity's practices, I will dwell more on the softer portion of that particular part. At the same time, I will tell you the pragmatic side of that particular part. And I think in that context, I will tell you, I have switched, as I told you, as a chair of audit committee. And now suddenly my role has undergone a change. Previously, just to give you, I don't know how many of you are aware, there's a guy called Zubin Mehta, who was a person who was in charge of a philharmonic orchestra across the globe. He was in West Coast of USA, even in India, he was in Israel. A lot of this, he kept on creating orchestras. In his orchestra, there will be more than 100 artists. They will come with their own musical instruments, and they will all get together in a synchronized manner to come out with what they call the orchestra. And Zubin, Mehta would turn the back to the audience, and he will concentrate around that team to come out with what they call the brilliant kind of harmonious kind of music that anybody could get it on that account. And I think in audit committee, or even for the board for that matter, when it comes to internal controls or assurance kind of piece, we also like that have many players who are sitting on the other side, and those are the stakeholders who give overall put together what we call the management assurance to the company. In that, you have internal auditors, you have statutory auditor, you have compliance officer, who's a chief compliance person, you have an CIO, who's a chief information or chief data officer, as we call it today. You will also have a CFO who will be there on that account. So these are the 5 factors. They will all be surrounded. They are like players with their own instruments. And in audit committee, they all come together to come out with a synchronized kind of music, which is of management assurance on that account. So in audit committee, when I moved from the chief of internal auditor to the, I would say to the other side as, chair of audit committee, I realized that each and every player in that should be such that he syncs with others, he synchronizes himself with the pitch and the music of others. At the same time, he should, when his turn comes, only his music is visible, or you can hear him out. Remaining people keep a low profile on that account. So like that, they are in synchronized fashion, come out with what they call the beautiful kind of melodious music. In internal audit committee, all of them put together do that kind of things on that account, putting together. So you will find when compliance officer is there, the internal audit, the management, the statutory auditor, CFO, all back him up. And by virtue of that, they create a synchronized kind of things on that account. So internal auditor should be more a co-worker rather than positioning himself as what we call, like an Amitabh Bachchan, who is now, away from everybody. Like, he's the one who can fight, who can sing a song, he can dance, a lot of things we are doing. And internal auditor, though he does that, he does it in a very subtle fashion, and he synchronizes with others. And this is something which is very critical to understand on that account. I think in that, I always say, who is the best internal auditor? The best internal auditor is that who keeps a low profile, but at the same time very effective. And in that, in Hindi, I remember a couplet from Premchand Munshi. And this is where, an internal auditor should say for himself, he says, ख्वाहिश नहीं मुझे मशहूर होने की, ख्वाहिश नहीं मुझे मशहूर होने की, आप मुझे पहचानते हो, बस इतना ही काफी है. So he becomes one of the co-workers in that overall management kind of assurance on that particular part. At the same time, he should understand that the people who are on the board, they do multiple jobs. Number of times they run their own organization. At the same time, they are on some few boards like where you are probably working. Sometimes they are working like me. I'm a professional independent director. So I do nothing else, but I'm only on few boards. And my all earnings come out of that particular thing through sitting fees and the commissions on that account. So there are people like us who are busy. So they should understand independent directors are always busy. They, because of that, you have to see to it that audit committee agenda that you draft is so nicely done. So it meets with the purpose of meeting with that management assurance. And also there are few things that you must understand. No one likes surprises. You have to work with stakeholders. And you should not, surprise people in front of the audit committee because nobody likes it. It's like, somebody is giving, and in Bhare Mehfil mein, if somebody comes and gives you hot potato in your hand, how you will behave. So this hot potato management should be avoided on that account. And, even in audit committee, it can happen number of times because of some other priorities. I've seen some of the audit committees where you are even given just 10 minutes to make your presentation. At the same time, there are people who will give you even 1.5 hours. So your presentation should be such modular way you have to look at it, that it can be presented in 10 minutes flat without losing the component and the significance of it. At the same time, you can even take it in a leisurely fashion for 90 minutes on that particular thing on that account. Also, I think when you're, I have seen some of the audit reports, they put a lot of jargons, lot of tough words, lot of, they will say, big kind of names. So for which you have to look out for, the Google dictionary and Google diary, and you have to keep on surfing it on that account. And also a number of times you see in your audit reports, people quote, this is the standard, so and so, by virtue of that, we are presenting it and all other on this account. So I will say now role has changed. Nobody likes surprises. Nobody likes that, fashionable or glamorous way of presenting it on that account. All internal auditors are now doing work very subtly and without number of times, without their physical presence being made, known to people. And this is where I must say, of late, in the last 2 years of pandemic time, when the COVID was there, I think internal auditors were the most effective people if they had a lot of enablers with them, such as, automation, the on-site, off-site kind of surveillance, which they had. Those are the people who became successful because then all their internal auditors could work from home, and which was very critical on that account. Second piece that I will talk about is every time you are taking up an audit assignment, and this is also meant for the professionals on that account, you must know what are the terms of reference. What is the purpose for which this internal audit matter will be used, and in what fashion you have to do. What is the scope that is required on that account, for which in a typical corporate thing, you will require terms of reference for the audit committee, and not audit committee alone, but also for your internal audit. And for which, of course, you will have create audit plans, suitable kind of things on that account. And at the same time, you have to see to it that there is a charter for your internal audit team, and that charter should align with the charter of the audit committee. So more or less, you are working on the same line. And based on that audit, charter, you have to then put it by way of a chart to see to it and create an annual calendar to see whether you have done X, whether you have done Y as per that thing, and then stay put with that particular thing. And that is a thing you have to show in addition to your audit plan efficiency, because audit plan will be only audit related parts, but you have to also show what is the succession plan you have, how are you training people, how are you improving your skill sets, what kind of automations you are doing it, what kind of tools you are using to automate those particular things, what kind of indexes or the dashboard that you are creating. So all these kind of things are very critical on that account. So that is the second part. So that's one. The third one, and this is where I must say, I am on few boards which are highly regulated. There are regulators who do that particular part. So internal audit, which is done in a non-regulated entity, and also in regulated entity, there is a huge difference. In regulated entity, each and every minutes of yours, each and every action of yours comes under the supervision of regulator. So you have to see to it that you are creating a fine balance where the transparency is there. At the same time, you cannot just go and do what you want to do on that account, so that regulator can catch you on the wrong side unnecessarily on that particular part. So there is something called, tightrope walk, I call it. You should know your parameters. You should know what all you are doing on that account, and look at all circulars that the regulator come out with it. Whatever that is prohibited as per circular, see to it that you are sealing those particular things organization wide, and that is a role internal auditors should do. We will at later stage talk about, these 3 lines of defense or 3 lines of defense, as I call it. We will talk about it. So there is nothing like I will only do the supervision, I will only do the review, I will only do outside work, I will not get engaged in the business. All these things are things of the past. You should work along with business to come out with these kind of things on that account, and this is what will get appreciated in regulated entities on that account. Next point, that is something I'm all talking about what is internationally happening, and this is where a lot of things are happening across the globe. India is no more a laggard. We are as good as other international players. Please remember that. So whatever I'm telling you is my own experience, and also with the friends that I have built up over a period of time, because I was a part of the Institute of Internal Auditors across the globe. I was involved in many of those things, including the standards of IIA, which I had created. Now I am on the Internal Audit Standard Board of our ICAI, where we are involved in a lot of, our own, I would say, accounting guidelines on that account. So considering all that, basically, whatever I'm telling you is all internationally happening on that account. Another one, and that is something which is very important, is I always call risk management committee and audit committee are nothing but like a conjoined twins. That means 2 heads, 2 different kind of stomach, but after that the body remains only one. So both of them eventually are feeding. They are thinking separately, but at the same time, they are all working for the well-being of that typical one body, single body, which is there on that account. So both risk management committee, that is a chief risk officer and chief internal auditor, have to work like Ram and Sham, or like the twins who are together on that particular part to see to it that you are doing beautifully. There will be overlaps. Number of times, as you know, conjoined being twins means somebody will eat more. In the process, it will create problems, but at the same time, the other person will not eat so that it gets balanced out. So all these kinds of parameters, you have to look at it. So you have to see to it that agenda, there is an overlap, but which is a healthy overlap. There is not much of a, repetition on that account. At the same time, both should work in the same kind of fashion. And in that, of late, people are, in fact, not really speaking, identifying what is risk management function and what is internal audit function. They are almost depending on the skill sets that you have, depending on, what kind of profile you have, geographical location, or number of times the biases or the unbiases that you have. Based on that, they may give you work even related to risk management, and risk management people can be given a work of internal audit. And now this is the new trend that is happening. Now people will ask what happens to independence. We will talk about independence little later. So risk management committee and internal audit committee are working together. And you should remember that other than the first 1,000 companies where risk management committee has been made mandatory by Indian law, LODR in particular, remaining people, it has been made very clear under Companies Act that the role of risk management will have to be monitored by an audit committee. So audit committee becomes the bada bhai, and both of them work together. Please remember, risk management committee of a regulated entity will have far more glamour, but they will only be looking at the risk connected on a day-to-day kind of basis. So somebody will be looking at credit risk in banking, market risk, operations risk independently. But at the same time, you must remember there is something called enterprise-wide risk that is as good as anybody else is doing in manufacturing companies. So you should know the difference between risk management committee's function, which is more on a day-to-day basis, and otherwise, and the remaining manufacturing companies on that account. So please remember, this is also a very critical kind of perspective on that particular thing. Last 2 years were very bad years. They were learning lessons. A lot of people have learned a lot internationally on that account. And I think in that, one thing people have realized it is we can go offline, we can go online. It does not matter. So far, you have right automation things, you have right kind of digitalization plan. Then, off late now I've seen post-pandemic, people who at a short notice would visit any branches, any plants, unscheduled, they will just go just like that. Now they have come to the conclusion that they were far more effectively audited or internal audited organizations when they were sitting at home, when they were sitting at their head offices, and they were not visiting it on that account. That is because people who had great automation and people who had the ability to create right kind of dashboards, they realized that there is no need to visit unless it is important from that perspective. So that is a great learning people have learned in this COVID pandemic times on that account. And I think most of the people now, post this particular pandemic, is getting over. Hopefully the fourth wave will not really create, hopefully, adverse effect on that account. They are now seriously looking at it. Can I keep 30 or 40% of my staff as working from home? Then in the process, you will get some intelligent, brilliant ladies who probably can do at specific time work from their houses rather than coming over here. Once in a week or once in a fortnight, they can always come, so that there is a bonhomie, there is a physical kind of, meetings happen. Because of that, lot of exchanges happen, because eventually you can't get rid of physical meetings all the time. But most of the people are seriously looking at it, and for which now people have come out in such a way that even checklist of the branches, checklist of the sales, it means there is an opportunity. So for every danger, there is an opportunity waiting for you on that account. And I think staying relevant is all critical. I really don't want to say anything, but I think you guys should think about it. Last 2 years, what all I learned. All of us have learned something or the other. I have learned even cooking. I have also learned how to wash clothes. Probably that's something I never thought I will be able to do it. But when maids stop coming home, when drivers stop coming, I don't know what to do. I learned something on my own. So these are some of the things called staying relevant, which is very important. And you don't have to get forced to do that. You must have that particular thing on that account. Another example that I can talk about it is something called ROTI, R-O-T-I. What is ROTI? ROTI is nothing but return on time invested. I think this is a very important kind of index. You must keep it to yourself to learn, because number of times what happens, like for instance, just to give you a live example, I don't want to put the credit away, but concurrent audit of the banks, I think we spend so much of time on those concurrent audits, and there are so many chartered accountants who look out for this concurrent audit. They get some paltry amount from that particular part, and they spend so much of workforce on that particular thing. So you have to look at what is my routine, return on time invested and return on resources spent on that particular part. And that's something all of us, whether you are individual or as an organization, need to look at it, which is very critical on that account. Same time, you have to keep on looking at introspection. What value add I done? What kind of digitalization I'm planning to do? If you don't do digitalization, you will become obsolete. What kind of models and dynamics you are changing in your internal audit? Now, that is what I always believe. When I graduated as a chartered accountant, or rather passed as a chartered accountant, around that time, we had a big question on sample size, how you will do. Then people will say, representative samples will pick up, we will do this, we will do that. This is a methodology. We are all looking at it. Now that sampling is all over. People have to do 100% checks, come out with deviations. And those deviations are today what previously we would call it samples on that account. You have to create dashboards, which is very critical on that account. You have to also learn to live with what we call the control self-assessment. And these are what international people are doing it. Control self-assessment is nothing but creating that checklist, creating that work, and convince business, buy them into your process and give it to them to work on it. It is equivalent of, blood pressure checking. Previously, people would go to the doctor and, once a month or once or twice, they will go and see a doctor, then he will check your blood pressure and he will tell you, okay, today kind of thing. But now, in control self-assessment, instead of doing that in 15 days, going to the doctor, you can now carry that, machine, which you can on a daily basis can monitor it. Control self-assessment is nothing but creating that kind of enabler where you create this particular thing and pass it on to the business to look at it. So you tempt them to say, you check your own health. We will then come once in 3 months and look at it on that account. So that control self-assessment, people are doing it. They are creating various dashboards and passing it on to them to understand how they should look at the business. And I think this has become a big organizational advantages. So service orientation of internal audit is becoming critical. Create those tools, pass it on to people, and that is a new trend that is happening, for which people are using those business intelligence, machine learning. Mind you, there are enough people who are happy to help you on that regard. What you really need is what is needed for the organization. Convince them what is needed. Our friends will create a right kind of programs for you. So this is a great job that people are doing it on that account. So audit tools, automation are all important on that account. One more point, I think that people talk a lot on that particular part, but I will tell you, you now need to be what we call the agile auditing. You need to be agile auditor, or you can call it nimble auditor. So today, you should be able to create what we call the modular audit plan, modular checklist. You have to create modular even skill sets for that matter. And then like that, Rubik Cube, you can keep on changing that the way you want. You can give the sort of color that you are looking at. Just to give you one example, banks, there is a value chain. Even in manufacturing, there is a value chain. You can look at it. Let's say, you have procurement, then you have logistics, then you have production, then you have again, the finished goods going for logistics, then you have sales, then you have receivables on that account. So that total value chain, you can look at it in two ways. If you create a modular one, you can create it, 1 year you can look at only procurement, you can look at sales, like this you can look at it. Otherwise, you can look at horizontal thing to say, I will look at entire value chain of every plant. So that can be done. So that kind of flexibility is now the need of the hour. Everybody is doing it. And I've seen some different kind of people every 6 months, forget 1 year, they are changing that role model. Why? Because it gives newness, it gives the freshness. There are any, I would say, wrong things that are happening, gets checked on its own. So this is also very important on that account. And one more important point that I will tell you, and I think I've talked about it, getting to know business knowledge, getting to know internal audit knowledge is very easy to get. But there are 3 typical cues, as I call it, and these are the cues, or you can say leads, that are important. Of course, the first one is your intelligence quotient. Because of that, you get job, you get level, you get industry, you get right kind of organization or a wrong organization, depending on IQ. That is where your degree marks will count a lot. Then you have to develop what we call emotional quotient, which is very critical. Emotional quotient is, can I create a win-win? Can I create wins for both of you? And this is where the art of negotiation becomes, can I create advantage to you, advantage to me? Can I do that kind of thing? But the last but not the least is, now it is also important to create what I call adversity quotient, which is important. How a person behaves in adversity, you can look at as an opportunist, you can look at it as a defender, whatever it is. At relevant times, you have to take a decision. But this adversity quotient is very critical and important. So you guys have to pay attention to that. Do a lot of, I would say, Google search on that. You will understand in today's life, a successful person, even in industry or anywhere, even in internal audit, you will find a guy who has the best adversity quotient more than the EQ and the IQ. IQ is the lowest. You get into entry. After that, you have to create how I will work with people, and this becomes a very important. So business knowledge, internal audit, soft skills are all important that you have to understand on that account. Next point that I will talk about, and this is very critical on that particular part, is today, data is going to play an important role. Data is the new oil of the digital era. It is necessary for you to see how I can protect data which is in my custody. For instance, today, I think we look at it very casually. There is a guy, let's say I have a car. My car is coming for an insurance. Just before the due date, about 1 month or 6 weeks before that, I start getting calls. People very, very prominently tell you, sir, we know you have an X car. We know it is a 3-year-old car. I know that it is insured by so-and-so company. Sir, we promise you, we will give you cheaper insurance rate than that. Only thing, tell us whether you have claimed any, are you eligible to claim no claim bonuses? That means you have not claimed any claims this year. That is the only thing they want. That means what? Your data has already gone. They know which car you own. They know the vintage of the car. Probably they know my policy number. Everything is known. That means I have insured with some insurance company from where the data has gone off. Now, this is where in Europe, there is a law called GDPR, which is the, where under that particular part, if I'm changing one service provider of, let's say, this 4G or 5G, and I'm going to somebody else, I have a right to tell the original with whom I had, I was working, he was a service provider, to say, I'm stopping your activity, I'm stopping your services, you delete all my data. I don't think in India we are capable of doing it. Our data protection law, which is supposed to come, is still in the bill stage. It is under this particular, I would say, dispute. And it is right now, I think they're talking about JPC or Joint Parliamentary Committee to do the things on that account. But I think most of the people now have to work on what I call the cybersecurity related parts and also data protection plan on that account. So I think it is important for you people to set the right tone in the organization. You have to stay diligent, for which you have to create your own knowledge of that particular part. You must have the ability to independently assess the cybersecurity risk management program. There are a lot of service providers who can help you doing that. Grab that knowledge in 1 year or 2 years time and inbuild that into your things. You have to review escalation protocols. That means who can get the data, who can raise the question, what kind of data can be shared, all that authorizations and escalation protocols for the violation is also very critical. Who attends to it is also very distinct, and the turnaround time for that is very critical on that account. You should not forget the third-party risk. Please remember, all our data, we never do it on our own. There are a lot of service providers, including the person who is managing your IT system. He is also a service provider. So you have to understand how I can keep my data intact. And then for which you have to create right kind of training of cybersecurity in the organization and what I call testing, response, and recovery. And that's something you have to keep on looking at it as internal auditor. An organization which doesn't look at this particular part will lose their importance, will lose their reputation, and then nobody will deal with them in that typical way on that account. So you should remember this particular part. Next point that we will talk about, and I'm all talking what is happening internationally. So you should know that if your audit plan does not have cybersecurity, you are not fully dressed. So you have to see to it that you build that particular thing very clearly on that account. Then we will go to two major things, and that is something which is always a critical part. And I call that as a separate kind of important things, domains. One of them is fraud related risk, which is the biggest risk. And you won't believe, a lot of times the ignorance that frauds are happening is the culprit for most of the failures on that account. And another which gets coupled with it is the ethics framework and whistleblowing. That is another organization you require it. Why it is required is because you must read. There is something called Report to the Nations 2022 by the Association of Certified Fraud Examiners, ACFE as we call it, which is a US domain knowledge. They have come out with a survey. Every alternate year they come out with a survey. There are some 5 mind-boggling kind of observations from that. They are saying, by and large, 5% of your revenue, 5% of your revenue gets consumed by fraud. And if you think I only got 1% fraud, that means the 4% of the fraud is going unnoticed. They are saying by and large, you don't know what you are losing as a fraud related part. That means even losing data, losing opportunity, somebody else grabbing the data, and because of that, they are marketing. It's a loss of business, which you don't know. It's a fraud. Second one is they are saying 42% of the frauds are all getting reported through tips. Tips means people give you leads. And out of them, more than 50% of them come from employees. Please remember, a person sitting next to you knows what you are doing it when they are working together. They are friends, they are foes, whatever that happens. So he remembers that there's something wrong. It gets noticed, it gets reported on that account. Another one is telephone hotlines is something which is a mandatory thing, which is a good thing to have on that account. It is not mandatory, but it is good thing to have. Most of the organizations had, but you have to also couple it with email and web-based reporting, because of late people are very uncomfortable on telephone hotlines, but they are very comfortable on giving it to you, sending by email or web-based programs. So that it gets registered without number of times, without the recipient's information on that account. The more you give protection, the more effective it becomes on that account. An efficient framework of hotlines, they detect frauds more quickly, and that is the understanding. And last but not least, and this is something you guys as an internal auditor need to worry, it says that it takes 12 months to detect any fraud. That means it is already happening. It happens over a period of 12 months and you will get to know. Please remember, all of you have just gone back to the office after this pandemic is open. I will not be surprised in the next 6 or 7 months time, a lot of you will realize frauds are happening here, there, a lot of things are happening on that account, and those frauds are thought, which are not thought of, because it might happen because some of the people are working from home, or some of the people are substitute because of this, pandemic related part, but these things will start happening on that account. Next point, and this is very critical, and I think I will not dwell on it much, independence. Independence of an internal auditor is very critical. The whole world is talking about independence. Previously, it was a very strict rule saying that an auditor will do only auditing related work. He will not get associated with any assistance to the business or otherwise, and for which they had designed, even including the Institute of Internal Auditor and also to some extent a lot of other institutions, they said we should have a clear, what we call 3 levels of defense. The people who are running the business should be in the outer skirts. People in the middle are the ones who are the service providers of them. And the third thing should be nothing but only internal audit. They should not get involved in anything so that they lose their independence on that account. So that was the word. Now the things have totally undergone a change. Now even some of the institutes have reduced it to say from 3 lines of defense, they call it 3 lines of model. So they are just putting it across on that account. And I call it, in next 1 or 2 years, people will start calling it as a 3 lines model. That means an internal auditor can go and also work along with marketing guys. He can go work with risk management people. He can go work with anybody in the business on that account, because according to now people, independence is a state of mind. If you are independent, you will be independent even in mind. It doesn't matter with whom you work, with whom you do. So far, your independence is intact. When you are working on some assignment, you should not be doing the auditing of that. And that is the only philosophy which is now an official thing on that particular part. So you have to understand this is very critical on that account. Now, I will come to some typical other points which are very critical on that account. Pre-audit committees. Before audit committee, now there's a good practice that is happening, and I do that for all my committees. I have something called pre-audit committee. People call it, darbar, as I would like to call it. In that, I believe that there are no, I would say no restrictions. They are not recorded. So I want in those meetings, internal auditor to come out openly, freely, what are their challenges, what are their problems, what exactly are the audit observations. Some of time they will say, I am trying to convince the business, so I will not probably put up in this quarter, I will put up in the next quarter if it doesn't work out. So these kind of pre-audit committees are like, agree to work on, agree to defer some of the things. That is what people are doing it of late, though it is not official, but it is a very effective manner in which you do it, because postponing internal audit by 1 quarter, life does not come to an end on that account. Unless there are frauds, then frauds have to be pointed out. It doesn't matter when it may happen on that account. So pre-audit committees today, you get to know on that account. And from the other side, you also get to know how audit committee members are looking at those pre-audit committees, how are they perceiving it, and that really helps. Number of times a good internal auditor will communicate back to the people the reaction of audit committee members. So by virtue of that, a right kind of influence can go in the thing to say audit committee does not appreciate all these kinds of things on that account. Now, under the Companies Act and under the LODR, it is made mandatory to have one-on-one meetings, that is in-camera meetings of internal audit, chief of internal audit with audit committee. And this is where I feel it is like you are invited into, I'm a Hindu, so I'm saying invited by Tirupati into the God's, inside, that you come and visit me on that account. And I think this is where you need to be very explicit, prepare your own things to say what all you want to disclose, because this is the time you can say all your challenges, you can say what are your problems, how you can work on that particular thing. And this is very critical. And in this context, I remember one book. That book name is called Willful Blindness. Willful Blindness by Margaret Heffernan. This lady is the one who has written that book. She says, why we ignore the obvious? According to her, most of the people in the organizations and even in houses are aware there is something wrong going on. But we tend to say, ठीक है, देखी जाएगी. अभी तक कुछ हुआ नहीं. We will see it on that account. And this is where, she says very clearly, and this, let me read it out. It says, business collapses are invariably preceded by a long period of clean audit report. Why clean audit report? Because as an auditor, you don't have to, look at it from, I would say, today's perspective on that account. So number of times we tend to give clean audit report for a fairly longer period of time. Nil fraud reports, even though frauds are there, you choose not to report it on that account. Or number of times, no whistleblower complaint. I think all these things are signs that there is something cooking, something really happening, which as a willful blindness, you should not ignore it. This is the time in one-on-one meeting to tell audit committee, I feel uncomfortable, sir. I'm looking at it, but if you can help me out, good. And that's how you should be working on that particular part. Some of the other good practices which are there, so that you will understand, is there is something called quality assurance plan. Like we have a peer review of the chartered accountant firm. In internal audit, it is recommended that you should have something called quality assurance and improvement program, which is very critical on that account. This is where once in 3 years, 4 years, or 5 years, you can invite an external party to come and see how are you really doing internal audit. And they will apply our ICI standards or any other standard that you can do to see how are you doing it, are you adhering it or not on that account. And you won't believe this kind of exercise helps you a lot, because if there are some observations, they help you in getting right kind of attention from audit committee. Your independence, if it is under impairment, it gets corrected. Number of times you get IT support immediately. Audit committee say, okay, you give them IT support. And number of times you get resources, people, because number of times the audit report, that report says that, people are competent, but they are short in number. So all these reports will come in handy for you to get related things on that account. Some of the things which are also critical from our perspective is related party transactions are today have to be approved by independent directors. So remember, audit committee is full of independent directors. So related party now today is going to be the buzzword for all of you as an internal auditor. Try to learn what is needed and what is not needed. According to me, this is a humongous potential for people to get assignment even for CA firms on that account. If you come out with the right kind of methodology and give them assurance, a lot of people will take external help in that regard, as I can clearly see on that account. Caro reporting has undergone a change. Now, these are all, technology on and the new laws related part. Internal auditor has to grab it and look at it. What are the changes that are required? Can I give services in that regard? So Caro reporting is also very clearly on that account and that things. And then last one that I will talk about it is, it's a question of survival. First is staying relevant, but it's also the question of survival. And it always, the Darwin's law always says, that it's not the stronger, but a person who's a fit and willing to change and willing to adapt to the new things is the one who survives on that account. So in that context, I think you must know every year in your audit department, what is the value addition that you have done. You have to create what I call the balance sheet of your own things or P&L account. What are the value additions I have done? How I am cheaper than outsourcing it to an external firm, otherwise you will lose a job. And vice versa, if you are an external party working on it, they will create internal department. So you should know what is the cost benefit analysis. So your each and every cost, you must keep back on your envelope, as I call it, to understand what is really happening. So I always say, know yourself, know your market practice, know your cost of audit, know what is relevant, outsource, in-source is fully doing it, or even there is some method called co-source. That means you take part of external people but work with internal people on that account. So I think this is again an exercise as an internal audit you have to do on that particular part. And then there are always new flavors which are coming in. Like for instance, compliance is an evergreen thing. People look out for 100% compliance. Can internal audit help you in that regard? Can you create automation? Can you create some support to the compliance department? That will be appreciated. Now today, ESG is a new initiative that is coming in, and this is where economic, social, and even corporate governance related part are going to be checked on that account. Governance piece is already there. We have a good laws around, but when it comes to the stakeholders' interest, what kind of pollution related part is happening, how we can reduce the Earth's heat. All these kinds of things are going to be very critical on that account. And I think let me conclude with some remarks, and this is something which I will tell you. I will recommend that you remain grounded as an internal auditor. Don't become Amitabh Bachchan, become a very low profile kind of person. Be humble. Get together with the business people. Internal auditors doesn't mean you are external party. You are a totally an internal party. Get together with them. Don't join hands, but don't join hands in wrong thing. Join hands in good things for work on that party. Become secretively effective. Don't have to, come out with a flag to say, hey, I done this, I done that. That people don't like on that account. Become cost efficient, which is very critical on that account. Work closely with the entire, I call it diaspora. That means management, not necessarily only audit committee member, with your own colleagues, with your own people, train them. Training is very critical on that account. And be in touch with audit committee all the time, because they are your own things on that account. And last but not least, be transparent on that account. And in that, on the last couplet, and since this is Mr. Charanjit Nanda's, domain area, I can't live without it. Last few words of Premchand Munshi, I will tell you, for an internal auditor. And this is something which I think nicely he has said. He says, "Mujhe apni auqat achhi lagti hai." That means be humble. You should know you are in value addition business. मैंने मुझे अपनी औकात अच्छी लगती है. मैंने समंदर से सीखा है जीने का तरीका. चुपचाप से बहना और अपनी मौज में रहना. And I think that means do your work, don't make big noise, do effective work. And that's what I would like to communicate to all of you. I think I'm concluding that with that, Poonam. If you want, I'm happy to be a part of this for the question and answers kind of session. So thank you very much for giving me opportunity.
Thank you so much, sir. Sir, I appreciate your efforts and energy. So your energy is so high. In the last session also, we are listening so interestingly. And also, sir, your speech is very outstanding, and you advise us to be relevant. And we learn word roti, return on time invested. We need to be agile auditor, and data is a new oil of digital era. So thank you so much, sir, for a wonderful session. And we have a question in question answer tab. And also I request all the participants to please put your questions in question answer tab. So our speakers will be answering. So, sir, there is one question. In your experience, this question is to Nagesh, sir. In your experience as chairman of audit committee, how did you manage conflicts with promoters and other board members on matters having implication of ethics, prudence, deliberate violation of applicable laws?
I think I must tell you, I think you can't create a culture overnight. That is one. But then I have never worked in a small organization which has grown big. I have picked up big companies. So I do not take any company where this program is efficient and running. And before joining, I will ensure that you have right kind of prescription of, what kind of, ethics and what kind of whistleblowing arrangements you have to get to know reading the balance sheet. And you will also, by and large, when you are talking to the, other audit committee members, when your nomination remuneration committee interviews you as an incoming board member, that is the time you have to ask these questions. And it is a very effective question because you get to know, if you ask this question, people who don't have it will not select you, which is in your interest. And if they select you, that means they know that you respect it. And by virtue of that, that system is up and running. So right thing to ask is, you can't create a risk culture overnight. It has to be worked very clearly. And if you feel you are working in a small organization, you have to see to it that internal audit and the chair of audit committee and audit committee need to ask questions regularly. They need to check how this particular ethics framework is working and how this whistleblowing is working. And that's the only way to go about it.
Thank you so much, sir. Another question is for Bharat sir regarding the risk assessment. Participant is asking, in spite of evaluation in risk assessment techniques.
Sorry, can you please come again? Evaluation of?
Risk assessment techniques.
Evaluation of risk assessment techniques.
Yes, sir.
Okay. If I got it right, I think it's a question about, whether the risk assessment practices which are being followed by the internal audit function, they are appropriate or not. So, it's never, there is no one size fits all kind of strategy. It will not work for, these data pointers which I mentioned or the other ones. Some of these may be generic and maybe, industry agnostic, but everyone considering, the industry you are operating in, the types of products and services, you need to evaluate over a period of time. That's one. And secondly, over a period of time, you will also get to see, basically the external information, basically the other risk events and coming, if there is any tweak which is required in your risk assessment parameters. Is there any other information which is relevant from a business perspective and which may be, objectively or subjectively managed and monitored and could be embedded into your risk assessment? And I would also like, to pick up something, which Nagesh sir talked about with respect to quality evaluation of the internal audit function every 4 or 5 years. So despite all of these measures in terms of, having a strategy which is specific to your organization, continuous improvement onto it, this external peer quality review or whatever name you call it, this will help you understand, if there could be any other parameters which may be embedded in your risk assessment. I hope that answers the particular question.
Yes, sir. Sir, next question is, this is how the digital process risk assessment is tackled. Any tools, meaning like if unit scoped in audit.
Again, quite Bharat, of all the people, if at all, Bharat can only take that decision.
Quite subjective. Sir, would you like to help? Actually, Poonam, can you repeat the first part of it? The second is clear.
How the digital process risk assessment is tackled. So
digital.
Let me put it this way. Digital is an enabler. Let me put it this way. I think what you require is a through processing. You must know your process. The basics cannot undergo change. You have to start, think it through what is needed. Then you can bring the digital things around that particular part. So as you said, you built up a wire. You require those red, green and yellow wires very clearly. Over and above that, वो सिर्फ silver का लगाने का है कि वो gold का लगाने का है नहीं तो वो तांबे का लगाने का है. That's something you can do. So that is digitalization. I think the first core part is very critical on that account, and that there you have to be very thorough.
Sir, another question is, what is the ideal framework for outsourcing risk management, financial outsourcing, material outsourcing in terms of RBI regulatory lenses?
No, I think let me put it this way: RBI is stopping everybody from doing outsourcing as much as possible, unless it is where you don't have the skill set and it is officially allowed. For instance, concurrent audit is the only one which can be given out, but internal audit, if you are looking at it, it cannot be done. But then fortunately, it allows co-sourcing. So by virtue of that, you can always take an external help for the technical knowledge. And I think by and large, a good organization, now I'm not discussing regulatory thing, the general concept is what you can do internally, but at a higher cost, and what can be, same thing can be done by an external party at a lower cost. You should in fact outsource it. And the second part which you outsource is where you don't have the technical knowledge or technical know-how on that account. So these are the only two things for which you have to outsource it. And I think that is the philosophy you must work out. And that's why when I told you, it is necessary for you to know cost benefit analysis of every activity of yours. So I think when you are advising others to create right kind of costing records, I think for us also as an internal auditor, it is necessary for us to understand how much I'm spending per audit. So each and every branch का कितना खर्चा पड़ता है, कितने लोग लगते हैं, या ये सब आपको रखना चाहिए. That is the only way you will be able to defend. If let's say audit committee decides that आपका रोल खत्म हो गया, I will give it to outside. At that time, you should be able to say, sir, मैं सस्ता हूँ और मैं अच्छा हूँ. That is the way you have to put it across.
Thank you, sir. Sir, Bharat sir, like lot of participants are asking for your PPT. So can you share PPT with
Sure,
them?
I'll share with Arunji and Aarti ji.
Thank you, sir. Also, Nagesh sir, one of the participants is asking, like, if he can get your inputs in PPT form or any other form, as he's finding it very relevant and very informative. And
I think
also,
this will be, this particular thing is a recorded one which will be available. He can always look at it. Right?
Yes, sir, right. So
after seeing a film, if somebody says I want a CD, ऐसा नहीं होता है ना?
So Mahesh ji, if you like want to listen it again, you can see the recording. And also, sir, Mahesh ji is asking if any book you can refer for practice. Any book you can refer on
I think
internet?
I already referred to 2-3 books in my things on that account, and I think he should read the fraud related fraud to the nation kind of thing. That's a great kind of thing on frauds related part. And I have told him about Paranoids Only Survive. That's a great book again, which is an old book, but every time I read it after 1-2 years of gap, I learn the new things in that particular part. And then last one, which I told him, is Willful Blindness, which is a great book. He can do the search on that. It's a Kindle copy available. By next 5 minutes, he can be the owner of it. It's a great book to read on that account. So these are the 3 things I've recommended. And over and above that, if anybody wants, I'm happy to get connected. I'm available on nagesh.pinge@gmail.com. But the person concerned should send very clearly what he needs to do. I'll be able to help him out. But I am not a technical person. Please remember that. If somebody tells me what is the cyber security related things, etc., that's not my business, basically.
So there is one more question. If an internal audit plan is not formally signed off by the audit committee yet, but the internal auditor needs to embark on an audit, how should the auditor proceed to retain some sort of interim approval for quality control documentation purposes?
Yeah, I think that happens number of times. That I can take it now, Bharat, this answer.
Yeah, sure, sir, sure, please.
This is always, that happens all the time. One number of times what happens, your total audit plan gets completed, and then you try to for the next entire audit plan. And then at that time, you know, there are a lot of challenges in the organization. Some big changes are going to happen. Some reorganization will happen. Some diving, slicing, some resale or some acquisition will happen. Around that time, though you can't say that, then what happens is you have a problem. You can't approve the entire audit plan. So we don't approve it. What we say is it's tentative, and we only get first quarter audit approved. and then you say in the next 1 quarter, we will get that thing refined. So that is the process that you have to do as a formal process on that account. So there is no rule to say that has to be an annual audit plan. You can do it on a quarterly plan also. A number of times during pandemic times, people kept on changing it for the simple reason there were challenges, but you had to work. So people have worked from on-site to off-site. A lot of things have happened on that account. And that is where agile auditing or nimble auditing I talked about. You need to create modular things. So by virtue of that, it is like a Rubik cube. You can shift and dice, and you can create right kind of things on that.
Thank you, sir. I hope participant has got their answer. One more question, sir, is that before starting internal audit risk assessment, which methods or procedures will you validate the management risk assessment and arrive at internal audit risk assessment outcome?
Yeah. So basically, I think it's more about how will we be validating the risk assessment of which has been performed by the management. So in my presentation, I also spoke about and it depends on organization to organization. So if I talk about a mature organization where the ERM framework is fully embedded across the lowest level, then in that case, internal audit will typically have a seat on the top level risk management forums and the audit and risk committees. In that case, the auditor or the chief audit executive, so they may get to see and evaluate, what kind of risks are being spoken about, what kind of risk events are being raised over a period of time, how they are being dealt with, whether they are being brushed off under the carpet or, they are being dealt appropriately, they are being raised, the appropriate root cause analysis is being done, what are the key risks which are emanating and how seriousness. So basically on the basis of stakeholder discussions, on the basis of having a seat on the risk management frameworks, risk management forums and the boards, over a period of time, the internal audit can evaluate how mature the risk culture is, how serious the management is with respect to emerging risk and all. On that basis, we can place reliance on the risk assessment which is performed by the management.
Thank you, sir. We don't have any other questions, sir.
Good. We can close then. Thank you.
Yes, sir. So this session is started with the opening remark of our Navi Mumbai branch chairman Abhishek Sahaji, then welcome address and keynote session by Charanjot Singh Nanda sir, and we have 3 technical sessions today: compliance in insurance sector, global trends and risk assessment, internal audit from the lenses of the audit committees. These all 3 sessions are very informative and so much value addition in our knowledge. Thank you to all the speakers. Thank you so much, sir, for the wonderful session. And we received many queries and we tried answering all the queries, and I hope all the participants got their answers. And I really thank all the team of internal audit standards boards who are working so hard for this session. Thank you. And sir, please accept my formal vote of thanks on behalf of Navi Mumbai branch of ICI and internal audit assurance board. Thank you, sir.
Okay. Thank you, Poonam.
Thank you.
Thank you. Okay. Bye-bye.